Hi there, Trisha here. I wanted to go over the two trades that I took today. I used two setups, one off a longer tick chart and one off a smaller tick chart for scalps. And I use indicators that all have to be in alignment along with my three charts before I take an entry, either long or short. So these are the trades that I took today. I want to show you this smaller minute chart because I drew Fibonacci lines on here so you can see once we got below the 50% mark, at that point we could take a short because up until then we were above both moving averages on the longer tick chart and above the 50% mark. So technically we weren't in a downtrend until this point in time. The trending indicator you can see is not exactly over the 20, but it's almost above the 20, which is good enough for me. If all my indicators are in alignment and the trending indicator is almost over 20 and at least heading higher, then I will consider taking it as long as everything else is in alignment. So this is a drill down to the smaller tick chart where the scalp entry actually set up for the short. It was at 11, just before 11:50 or right around 11:50, and I have divergence on my top indicator. Scalp set up here. All my other charts are in confirmation with this scalp setup. So I want to enter under this bar here somewhere. So I place a market order. I actually got filled on this bar where this arrow is at 901.75 short. I don't have my pivot dots on this chart. I haven't found anything in E-signal that I particularly like, but you can tell just by eyeballing where your pivots would have been. Here would have been one. I would have moved my stop to there, moved my stop to here. Then I moved my stop right here where you see the circle, and I got stopped out over here at 900.75 for a gain of 1. If you were just taking your +2 and getting out, you would have got your +2, but I used the pivot trail method for my stops on this particular trade. This is a trade that's set up at about 237, and this was a long trade. All my charts were saying I could go long. I was above both moving averages. My trending indicator was saying I can go long. My tick was saying I can go long. So I took a long right here. I actually jumped in a little bit sooner. I have my 4 red dots and a blue dot, and I actually hit a market order. I still got filled on this bar here where this first green line appeared above the blue line, so I got in just a little bit early, but I like my indicator has divergence on it and it's heading higher and it's not already in overbought territory, so I entered and got in at 907. Now if I have divergence on my indicator, I will take an entry if it's, like, for example, a long entry if it's already overbought, but it has to be just crossing in to overbought from divergence. If it's not coming from divergence and it's already overbought, then I won't take it, and the opposite is true for shorts. So you can see I don't have my pivot dots drawn on here for my trail stop, but you can see by eyeballing here I would have trailed, here I would have trailed, here was where I trailed and then got stopped out over here. So that was a gain of 3 3/4. Now I wanted to show you this because this was a scalp setup that set up just before 2 o'clock. And everything is in alignment on the scalp chart, but it is not in alignment on our longer tick chart. Our price action is not above both moving averages, so I pass on this. Now, obviously, you can use your discretion. If you feel that there's a lot of room in between the two moving averages, you might want to take something like this, but there really wasn't a lot of room, so I passed. But that's something that you're going to have to decide for yourself, because this could just as easily have gone the other way and hit the one moving average and bounced right back down. So I passed on this, but this still would have worked out just nice, really nice actually. But again, I passed on it. I want to show you this. This is a scalp trade that's set up at almost 3:30 this afternoon, and I wanted to show it to you because you have everything in alignment on all of your charts. You have divergence, you have your indicator moving up you have your scalp setup occurring, and on your other charts it's all showing that you can take a long. Now this was pretty messy and you could have taken it, but the reason why I didn't take it, first of all, it was very close to 330 and I don't trade after 330, but also you need to know what's going on with the price in relation to the rest of the day, or other days as well. So for example, at this point in time when you would have taken this trade, this was the high of the day over here. So realistically, you could only expect in most cases to get +2, because most of the time it's going to hit the high of the day and come back down at you. So those are things that you just want to consider when you are taking trades. If you're very close to the high of the day, you don't want to sit back and wait for the larger gains, because chances are you're not going to get it. Oftentimes you would want to wait until it broke out above the high of the day or low of the day if you're going short, and then buy the pullback or sell the pullback, because in most cases you are going to get a bounce at that mark. I wanted to show you this. This is the daily chart, and I don't usually look at a daily chart except for first thing in the morning, and I do that because I want to see what's to the left of me. I want to have an idea of what is over here to my left, because usually that's going to act as support and resistance. So in this case, obviously we are having an up day, so anything over to my left I want to look at, because chances are we're going to get to that spot and we're going to have a pullback. And that's exactly what happened. We got to that mark and we pulled back. So you always want to really be paying attention, not all day, but first thing in the morning you want to just check and see what those reference points are, because obviously if you're getting close to that point and you get a long setup, you're going to want to pass on it, because it's realistically it's not going to work for you. Those are just some of the things that I do. Of course, you can do whatever you're comfortable with, but usually when you're coming into those support and resistance marks, you're going to definitely have a reaction of some sort. So the two trades that I took today were both scalp trades. I had a gain of 1 on the one trade and a gain of 3 3/4 on the other, for a total of 4 3/4. Now we did have a setup occur on the longer tick chart, but when we drilled down to our smaller tick chart, we did not have an entry on it. So we pass on that. You just don't jump in. Some people, when they're looking at the longer tick chart and the price breaks above those trend lines, they will just get in on the next bar. But there's just really, in my opinion, no high odds of that trade, because it hasn't broken out yet. It could easily come back down into that trend line. So you really want to wait for the setup to occur on the smaller tick chart. You don't have to wait for the scalp setup, but you want the other indicators all to be in alignment with that. So I hope that helps, and we'll see you tomorrow.